some parts of Africa. We're one landlocked country against another landlocked country, and the borders aren't open for the exact same times. I mean, it's simple stuff we need to get right.
Hello and welcome back to the Bankers Masterclass series on Africa's growth prospects in association with Absa. I'm James King, the Bankers Africa and Middle East editor, and with me is Jeff Gable, head of research at Absa. In this final chapter, we will be discussing intra-African trade and its role in promoting sustainable growth, as well as the implications of the UK's decision to exit the European Union for key economies across the region. Jeff, at a time when some key global economies appear to be turning their back on the ideals of free trade, Africa seems to be bucking that trend with the signing of the African Continental Free Trade Agreement. Is this more symbolic, or will it have a real impact on the way the continent moves forward from here?
I mean, it's a hugely interesting time, right? There is a sense that globally sort of trade is under attack, and it's probably too simplistic a narrative to say this is really driven by the White House and the rest of the world is just responding to it. In Africa, you're quite right. The Continental African Free Trade Agreement is agreed, not signed by everybody yet, but agreed by 55 countries in order to reduce tariffs on 90% of the goods that move within those borders. When this comes to fruition, at least in terms of the number of countries, this will be the largest deal done since the founding of the WTO. So this is big stuff, right? Very big stuff. At the same time, we want to approach it in a little bit of a cautious way. We know that African countries today, for the most part, don't trade very much between one another. Are they not trading very much between one another simply because the tariff structures are too high, and then so the free trade agreement will allow us to bring those down? Well, there's lots of non-tariff barriers to trade as well, and that's going to take a lot longer for us to work through. What are examples of those? Well, let's think about just paperwork at borders being incredibly onerous. Let's think about border operating at times. We have simple examples in some parts of Africa. We're one landlocked country against another landlocked country, and the borders aren't open for the exact same times. I mean, it's simple stuff we need to get right. It's about things like standards. You know, we're accustomed here in the developed world, in the UK and others, for a UK stamp on something, or a European stamp, or a US stamp. But within Africa, Zambia wants to have its standard stamp on something. Rwanda will want something a little bit different. So there's lots of non-tariff barriers that are also holding us back. The other challenge, of course, is just the things that we produce. So it isn't the case right now that you're producing lots of finished items in one country in Africa, and you're going to be able very quickly to send them across that border. That isn't the story of successful trade areas. If you think about the European Union, for example, it's not that the French are willing to buy Belgian cars and the Belgians are willing to buy German cars. It's that you have a completely integrated supply chain. So you're moving parts from one to the other. You're reaping broad efficiencies. That's going to take us much longer in Africa. But as a statement of intent, in this much more challenging global environment for trade, it's a pretty powerful one.
Okay, so really then for sort of intra-African trade to play a meaningful role in kind of sustainable growth across the continent, it's going to take a long time before that really develops and those supply chains can kick in, and it's a long-term story.
I think so. That said, we are seeing some success. So for example, if we think about consumer goods, if you are in a country like Zambia, for example, or probably even Uganda, and you grab a tube of toothpaste, that brand will be a brand that you are familiar with in the West, but where that toothpaste was produced, probably produced in South Africa, for example. We're seeing the same sort of thing as Kenyan manufacturers are able to produce and export elsewhere. You see Egypt being successful in that state. We're looking for better success in Ghana and Nigeria. So these parts of sort of being able to produce goods that are relevant for African markets in Africa, we're already making some headway there, and the expectation is that the free trade agreement will really accelerate that process. But let's not think about this as a 2 or 3 year project. It's going to be a long, but I think ultimately successful one.
Okay, now looking further afield, Jeff, to what extent does Brexit impact the way that the UK and other global economies can sort of interact and engage with Africa? What are the implications?
I mean, I suppose one of the positive things here is that the UK, as I understand it, is really sort of trying to plant its flag to say, listen, we are a global trading nation. And so what we believe is part of our post-EU future is our ability to trade more robustly with more parts of the world. Well, that should be music to our ears in Africa. We know, particularly amongst those countries in Africa that have Commonwealth connections, that our natural partner is the UK. For many countries in Africa, the single largest investor in that economy is British or from the UK. So on that side, we don't expect much to change very significantly. The concern, I suppose, would be in the very near term, whether because of Brexit, companies here in the UK really needing to focus on some very fundamental and important questions vis-a-vis the critical relationships with the EU and others, and therefore taking away management time from thinking about the opportunities that exist on the continent, or frankly, we need to put our hands up as Africa as well. The last 2 or 3 years have been much less smooth for us in the way that we as Africa are presented to the world as an economic opportunity. We've seen much less attractive over the last few years than we have before. As Africa's economic house or the order of that house improves, 2018 better than 17, 17 better than 16, as Brexit settles down, I would expect a more robust re-engagement, and I certainly expect that British companies will continue to see significant opportunities on the African continent, and Africa will continue to see important market opportunities here.
Okay, well, Jeff, thank you very much. Thank you.
Thank you.